afternoon. You're watching our closing trades on ET Now. I'm Anisha Jain, with me Saisha Faridi, and for now things are looking slightly better than what we started off the day with, because Nifty is towards the flat line. Yes, it's a bit of a red on the screen, but at least we are in that range that we had seen earlier, and of course after that big run up yesterday, maybe a bit of sideways move is probably okay. Sensex is in the red right now. The Bank Nifty continues the outperformance. For Bank Nifty, however, we're off the highest point of the trading session a bit, or maybe these rates are not updating. We should probably try and bring up the intraday charts, because these probably are not putting the right numbers into perspective, at least as far as the Nifty Bank is concerned. So let's pull up that, up almost 190 points right now at the highest point of the trading session. Let's take a look at the internals as well as to what exactly is working well for the markets right now. It is the overall PSU banking index, which has managed to perk up a bit. You're seeing a bit of a recovery on real estate as well. So both of those indices holding up in the green. Having said that, it's volatility which has taken a bit of a dip. So call it the effect of after expiry day. But there is a drop of almost 5% on India VIX right now. The broader markets are doing okay. The Nifty Midcap 100 is above the mark of 60,000 for the first time ever. So that's doing fine. IT and FMCG index are at record high levels. So at least even sectorally, there are spots of green. While if you're looking for spots of red, there are names within, pharma and FMCG, which is in the red right now. So after hitting that record high level on the FMCG index, it's cooled off a bit.
Yeah, Bandhan Bank management meet. The key takeaways are indicating that business momentum is healthy across segments, comfortable with the MFI book trends as well. So that's one stock which is in focus on a tear right now. And we're just trying to spot out the green spots within banks which are pushing the Nifty Bank higher, like Anisha just highlighted. In fact, Jefferies upgraded the stock to a buy from the earlier hold, up the target price also to 1600. And now Kotak Securities met up with the Bandhan Bank management as well. And they join in with their key takeaways. In fact, Gaurav is here to walk us through exactly that. Gaurav?
Well, yes, there is some positive commentary coming up from the management of Bandhan Bank. Kotak Securities recently met with the management, where they have said that de-risking of the franchisee is currently on the way. And when they say de-risking, what they are doing is basically they are actually building a stronger franchisee with a diversified retail segment. In fact, what they have said is that they will be focusing on the secured segment. And on this, they are saying that we may see high teens in medium terms of growth when we talk about the secured loan segment. Other than that, what they are saying is that they expect some stress to build up in the book. But when we talk about specifically MFI book, they do not see any kind of stress which is more than what they had anticipated. In fact, what they say is that industry peers are actually suggesting there is a stress in MFI, but they do not see any kind of risk building up, at least for Bandhan Bank. With this, they have reiterated their credit cost guidance of around 1.8 to 2%. What they also say is that they are confident on the positive outlook on the CGFMU audit, and with this, they do not see any kind of requirements also for the equity capital fundraise. So definitely some positive words coming up from Bandhan Bank. On this, Kotak has maintained buy rating, and they also say that there is a potential for the bank to deliver higher ROA. And on the back of this, we also saw that the stock is performing up. It's up almost by 5%. So definitely watching out on this counter on the back of the positive outlook coming up from the management.
Okay, Gaurav, we leave it at that. Bandhan Bank on a steady ship, 5% higher. Kunal, let me get you in on the show. Afternoon, firstly, because this is the trend you did identify, right? That banks are going to make a comeback. Tell us, what do you foresee now? Does it seem like a sustainable move? And I ask because many a times Nifty Bank has given you that kind of false move.
So it looks like sustainable this time around. So which means that potentially we should be looking at a follow-through up move for the Bank Nifty after yesterday's 500 plus point kind of a rally for the banking index. It's a good sign that we are seeing 150, 200 points of a further up move. What is also really important is that the Bank Nifty is trading at a multi-week swing high, and if we close above this 51,900 plus mark, we could be looking at a multi-week closing high also for the banking index. The best part about the market today is the drop in India VIX, and not just that the India VIX has come back to that 12.5 level, because it's there's a big event lined up next week, and the markets are going into a low volatility kind of a regime. That indicates that the markets are expecting that there may not be any negative or a major negative price action for the global indices as well as for our market. So I think that's the highlight of today's market. And if the India VIX drops, say, to the levels of 11.5 or sub 11 mark, then I would probably believe that we may see a further extension of this rally. So all in all, positive sign for the indices, and the drop in India VIX could probably aid the rally further.
Okay, point taken. So India VIX drop is something that you should be watching out for as well. But from the broader markets, a lot of vibrancy today. Take a look at Jubilant Life, up 13%. Godfrey Phillips has been having a great run this week. In fact, if you pull up the week-to-date chart after that AGM happened, that stock has been on quite a bit of run off late. Westlife Development has suddenly perked up 8%. It was dealing with a jump up of almost 4-5% during the trading session, but now perhaps at the highest point, that 8-9% gain coming in. You also have Home First Finance. It's ebbed off from the highest point but still in the green. Piramal Enterprises, Equitas Small Finance Bank and Voltas. These are some of the names that I'm watching out for. On the losing side, however, Narayana Health is under pressure. Zomato is also down despite that upgrade coming in from Bernstein. But housing finance companies, those are the ones which are doing fairly well. Rahul, would you attribute this to the excitement just ahead of the Bajaj Housing Finance Limited listing on Monday? Or perhaps there is just a fundamental reason for some of these stocks to be buzzing?
Hi, good afternoon. I think obviously one bigger trigger is obviously the kind of response what we got in Bajaj Housing Finance. I think was that a lot of housing finance companies were undervalued, and I think we saw that things coming back into it. So there was a value into most of the housing finance companies, which has flared up quite sharply in last couple of sessions. And I still believe, I think a couple of them have still undervalued. Looking at PNB Housing, we saw multiple blocks and stock is just hitting a new highs. Still there's a value. It could be another 20% upside in it. LIC Housing Finance, the last quarter was bad, but I think if I look at overall and the guidance what the management had given, I think that stock also looks interesting. Canfin obviously is one of our favorite in the small and mid cap space. That has also done well. So I think all in all, just to add it up, I think just an added kicker by Bajaj Finance IPO theme. I think we've seen most of the housing finance coming back into the limelight.
Okay, point taken. Since you're talking about how you're positive on Canfin Homes and PNB Housing, we did incidentally speak with the management of PNB Housing today. You're out a slice of that conversation.
I think yes, sometime during the year we could see a bit of rate drop. I think the cycle would start, but it will take time. We were anticipating this to happen anytime during Q2 or Q3. Now it looks like it might get slightly pushed towards end of the financial year. I think the money is not really flowing into as deposits. Probably it is getting into other asset classes. And therefore, at least for next 4 to 6 quarters, we may not see very severe competition from the banks. Going forward, the price could consolidate. And definitely with this, the ticket size across all the segments in retail, whether it is super prime, prime, emerging, has actually gone up. So it has helped in a way. But from a long-term perspective, the price shouldn't increase drastically.
Okay, since we're talking about Bajaj Housing Finance, and that's going to be the big one to look out for on Monday. What a bumper IPO, the grey market price, all of it. Let me take it across to Somit and, try and understand where exactly are we expecting a Bajaj Housing Finance listing, and more importantly, whether the sector itself, Somit, is poised for a re-rating post this IPO.
Well, yes, definitely the sector seems to be re-rating given the fact that Bajaj Housing Finance listing is expected to happen at a significant premium. Now, the listing is expected to happen at a significant premium because the subscription numbers were very strong. It was subscribed over 63 times, and the grey market is suggesting a listing gain of at least 90% on Bajaj Housing Finance. Now, if you look at the base price that is the upper end of the price band, at that price, the FY26 price to book was at around 2.6 times. Now, if Bajaj Housing Finance list at a premium of nearly 70%, then the valuation would come to around 4.4 times, making it one of the most expensive listed NBFC housing finance company, because the peers like LIC Housing Finance, Canfin Homes are trading anywhere between 1 to 2 times, while PNB Housing is trading at just 1.4 times. The affordable housing lenders like Aavas Financials, Aptus Value and Home Finance are trading anywhere between 2.7 to 3.5 times. Now, if Bajaj Housing Finance list at a 90% premium, then the valuations will be further more expensive at close to 4.9 times. So this premium listing of Bajaj Housing Finance could re-rate the valuations of the entire sector as well. Also, this premium listing could help or could increase the SOTP value of Bajaj Finance, given the fact that Bajaj Finance owns nearly 88.7% stake in Bajaj Housing Finance, and if Bajaj Housing Finance lists at a premium of nearly 90 odd percent, then the SOTP value of Bajaj Finance could increase by around 8 odd percent as per our calculation.
Interesting one at that. Thanks, Amit, for highlighting that first up to us yesterday itself. And that stock, as well as Bajaj Finance and FinServ, have been in focus today. In fact, Bajaj Finance is one of your top gainers at the index level. Rahul, you talked about the entire housing finance sector and how you're positive on Canfin and PNB. But the big question now is, when Bajaj Housing Finance does list on the bourses on Monday, if it opens, let's say, at the value of 130 rupees, 150 rupees per share, because the issue price was around 70 bucks, would you still buy afresh into the after the opening of that stock? Okay, we'll try and reconnect with Rahul and pose that question again. But in the meantime, just taking stock of some of the other big buzzers in the trading session. Westlife Development is holding up 8% higher. Of course, you also have names like Jubilant Life doing quite okay. So, Kunal, within the PSU banking space as well, which is perking up. In fact, that index is up as well. What would be your top recommendations, if any?
So I'll go with SBI. That's a beaten down stock. Low to moderate beta kind of a chart for SBI, trading at closer to 775, 780, which is the swing low for SBI. Bank of Baroda is also some of the one of the other stock which is looking fairly attractive. The risk reward, the divergence the stock has shown on the daily charts, and I'm talking about the RSI divergence, where the prices have made a swing low, but the RSI has actually made a swing high. On a relative basis, so that itself indicates that the stock seems to have formed a major short-term bottom for itself. And then same is the case with many of the other PSU banking names likes of PNB, Canara Bank, etc. All of them are forming a synchronized kind of a divergence pattern as well as a short-term bottom formation pattern. So I think in that view, SBI could be one of the better bets at current levels. Even if there's a minor pickup of say short covering for SBI and the PSU banking stocks from current levels, we could be looking at a trading pop of another 4 to 5% further from current levels.
Okay, that's the take coming in on some of these banking counters. We're going to take a very quick break. Still holding on to the gains actually for the Nifty Bank, and mildly in the green really, just with a positive bias is how you're quoting on the Nifty futures so far. We'll track markets, but on the other side of this break. Back for closing trades right here on ET now. Still flat for the index, still led by banks, media, even technology actually is not doing bad at all. In fact, everything from Oracle Finance to Wipro, Birlasoft, LTTS, they're all holding up in the green as we speak right now. In fact, Wipro has been quite the mover from the word go. A 4% bump up on that stock. Emphasis, Coforge are the other ones which have been seeing some fairly strong traction. I can't say the same about some of the other large caps. It's a very sedate day for a TCS, Infosys, or for that matter, even an HCL Technologies right now. But that said, Rahul wanted to get your thoughts in, because I think the weight is pretty equal when you talk about tailwinds and headwinds both for the IT sector. But what about the investment climate?
So I think overall, if we look at it, I think the IT, again, in last one quarter, if you look at it, I think one of the best performing sector in terms of performance. Obviously, it's backed by the results which had come in the last quarter. And looks like the IT as a sector which has bottomed out. And I think looks like, going forward, I think what we are looking at is obviously the Fed's decision on the interest rates, which will augur well for the lot of BFI segment as a sector to, again, the orders coming back more from that segment, which had been muted, if I have to look at it. So I feel that entire IT as a sector, which was undervalued, and now looks like that I think things are back into momentum. And what we see, I think the mid caps and the large caps, both stocks have done well. So going forward, I think still that there's a lot of value in the large cap stock space. So what we've been liking is HCL Tech in that space, TCS and the large cap front, and Mindtree, all these three stocks, what we've been liking in that space.
Tech, TCS, LTI, Mindtree, these are the top bets within large cap IT. But before we went into that break and snapped that line, Rahul, I was asking about Bajaj Housing Finance. Once it does list on the bourses, and the expectation is it can list anywhere between 130 bucks to 150 rupees, because the issue price was around 70 rupees. Would you still buy afresh at those levels?
It's a difficult question. The
Or would you book
momentum is
profits
good.
then? Will you be tempted to book profits then, seeing that 100% gain on the ticker?
So I think yes, I would be tempting to book profits on Bajaj Housing Finance. And if it's at 100% listing gain, if it happens, then I'm sure I would look at booking profits in that stock.
That's where the long-term investors would come in. What was it, SEBI, right, which came out with that note that most IPO investors tend to flip either within a week's time or within a year's time. So I guess that.
But if you see a
proof is
100%
out
pop
right
on
there.
day one, I mean, look at the kind of return on investment. If you annualize it, I don't think I can find even the number for that. But interesting, let's see what happens on Monday. Does it actually list with the kind of enthusiasm that we are seeing, or perhaps something changes over the weekend, because global cues have been fairly volatile as well. And of course, in the coming week, the biggest talking point would be the Fed meeting and the outcome from there. 17th and 18th is the day when the US Fed meeting happens, largely priced in a 25 basis point hike. Let's see where we go from there. But Aditya Arora is with us, so let me take it across to him and get a better sense as to what he's making of the market mood right now. Aditya, the question is for you on the market setup.
Hi, good afternoon. Look, I think markets are pretty range bound. We saw a fantastic move on Nifty yesterday, but that kind of a move is lagging in Bank Nifty. Although we are seeing, market is very divided. Large caps are doing pretty well, but people are complaining that their small cap and mid cap portfolio is not doing well. So a lot of stocks are doing, we can see a lot of distribution also on a lot of small caps and mid caps. So I remain very selective on various stocks, and on index level, I'm constructive on Bank Nifty. Maybe a catch-up rally is pending on Bank Nifty with a lot of banking names forming very bullish pattern like ICICI Bank, Kotak Bank, Axis Bank, etc. Whereas, Nifty could underperform now and Bank Nifty could outperform. This is one theme which I'm looking for. And if I talk about index of small cap and mid cap, then I remain, pretty bearish on that index because a lot of stocks, you can see a lot of distribution pattern in a lot of mid caps and small caps. So one should be very careful in that pocket because post the Fed meet, 5 to 10% correction cannot be ruled out.
Some correction coming in perhaps on the way. In the meantime, while of course IT continues to hold out, banks are lending support right now. Rahul, just wanted to understand what your general strategy is right now in the market. Have you deployed or recommended deploying any fresh cash anywhere other than, of course, the Bajaj Finance IPO?
So I think obviously the way the markets have been, and I think I would still be invested in the markets 100% of it. And it looks like any additional capital or someone has, I think still looks interesting. So I think one sector which is fairly underperformed, if I look at, they have performed, but fairly little, relatively underperformed versus Nifty is the banking universe. So I think way the 12.5% kind of a credit growth guidance from most of the banks and 15% earning growth from most of the large private as well as public banks. So my sense, I think this sector is fairly undervalued versus the other sectors if I have to. So I think banking looks fairly interesting, and I don't think so. The risk versus reward here in this entire sector looks great from here. So PSU as well as private both. So PSU, a lot of large PSUs as well, banks have corrected 15%, 10 to 15% on an average from their recent highs. So I think one can make a basket in that. Private sector banks fairly also has underperformed if I look at a couple of years, but I think still looks interesting. Ways of HDFC, ICICI, Axis, I think all three looks good. SBI, Canada, and a Bank of Baroda in a PSU pack. So I think 5-6 bank one should allocate as a basket and still be invested in this financials.
Basket approach is what you should follow when it comes to the financials. I'll pick your brains around Bajaj Auto as well, but before that, let's hear out a slice of the conversation we had with the management earlier, because they were fairly excited about the kind of response their bike has seen so far, and they're expecting that they will be able to scale it up further as we go along. Hear out what Mr. Rakesh Sharma had to tell us.
Monsoons have such an impact that not only deep rural, but they affect semi-urban and urban areas also in our kind of segment. They have a very good monsoons, have a very uplifting effect right through in our kind of the two-wheeler and three-wheeler customer base. Actually, the origins of this revival are, at least 2 or 3 quarters ago. And I've been saying that fundamentally, this revival is sitting on the revival of the economy now reaching the pockets of our kind of customer. 70% of our customers earn a monthly income of about 30,000-40,000 rupees per month. And post-COVID, they were quite battered. Their savings had got hammered. And when the post-COVID recovery started, it started from the top. And by the time it has affected this category of customers, it has taken that much long. And that is what fundamentally we are saying. Now, on top of that, a good monsoon releases some optimism, a nice budget, which did affect optimism positively to these people. All these things are add-on. But all this is sitting on the fundamental economic recovery now reaching the bottom of the pyramid.
Right, okay, that's the word coming in from Bajaj Auto. And Rahul, I guess it's been well established, right, that it's the two-wheelers which are sort of, making hay as opposed to the kind of slowdown that you are seeing in passenger vehicles. That's pretty much reflective in the stock prices as well and how they've moved. Case in point being a Bajaj Auto or a Hero MotoCorp or the underperformance for that matter from a Tata Motors or M&M as well, stalling at that 2,700 thereabout mark. How is it that you're maneuvering within autos right now?
So I agree with you. I think we've seen that. I think when we saw August numbers of auto dealers and September's, which yet to come, but I think August what we saw, and I think auto dealers and as well as manufacturers, what we can see is I think two-wheelers are still in line with the numbers. So and it's visible in the prices also where the stocks have moved up. So I feel that yes, there's a shift between a passenger vehicle to two-wheelers. So I think yes, Bajaj, Hero, Eicher, all three stocks looks quite interesting and they're fared well. And I think still there's a room that investors will make money in all these three sectors coming up the festive season, the mood, and plus the fresh new launches by most of them. So I think this two-wheelers will definitely do well versus the passenger vehicles, and we've seen that in the prices as well. And I think looks that two-wheelers to continue to roar in a couple of months more from here.
Right, okay. Rahul, good to have you on the show. We'll let you go on that note. Thanks as always for taking the time out. We're going to take a very quick break. When we come back, the last half an hour of trade this week.
Welcome back. Well, a quick look at the global markets and how the mood is across the board, because while we of course started on a bit of a back foot, we have managed to scale up. If I look at the European markets right now, they are up anywhere between 0.3% to 0.5%, so doing okay. And as far as the pre-market rates are concerned from the US, that too suggests an uptick. In fact, the Dow futures right now 50 points higher. Back home as well, we are just around the flat line, to be honest, for the Nifty, and we've been fairly range bound apart from the first dip that we saw. Okay, in the last few minutes, there has been a bit of a slide, 20-30 points thereabouts. Not like a deep cut, but just let's see how that really progresses. For now, it's SBI Life down 1.5%, Adani Ports, HDFC Life, ITC, Coal India. These are the stocks which are down, and Bank Nifty too has given up gains. So Kotak, HDFC, ICICI, all of these have moved into the red right now. Aditya, wanted to get a better sense from you on the insurance companies and the charts, because this week when there was no relief coming in from the GST, some of these stocks seem to have reversed. Aditya, the question is for you on the life insurance companies.
Yeah, I think insurance companies have been pretty resilient. If you talk about ICICI Pru, it's trading at 52-week high. When there was a lot of pressure in the market, we were seeing a lot of selling pressure in a lot of stocks. These stocks have stood well. I like ICICI Prudential, which is trading at current market price of 756. This could be bought at current market price and further could be added at 724. Stop loss should be 700 and targets are 800 and 820.
You know, we spoke earlier today with Gopal Balachandran from ICICI Lombard General Insurance, and he's pretty confident that they'll manage to actually beat the industry growth by a good 100 to 200 basis points.
I think this market, when you look at it from a longer term trajectory standpoint, should continue to exhibit that growth range of 15 to 20%. And what we have maintained, at least when we have talked to the market, we have said we should ideally continue to see that 100 to 200 basis points outperformance from a revenue standpoint. But in terms of the segments where we have looked at potentials for growth, is clearly from an aggregate standpoint, it's motor, it's health, and of course the commercial lines, which typically wherein we offer insurances to small/mid/large corporates. Those are the opportunities that one sees, but within each of these broad three segments, I think we try to do a lot more segmentation of various categories. Maybe over the next couple of quarters, I think we would possibly end up launching a lot more solutions when it comes to product profile.
Right, let me welcome on board Sudeep Bandhopadhyay as well and find out what he's making of the market. Sudeep, hi, afternoon. FIIs finally make a comeback. Crude continues to be sedate. Seems like all things going well, and I guess that was, only a validation when we did hit that all-time high, or a fresh high rather, just yesterday.
Yeah, absolutely right. I think, things are going right as things stand for the capital markets. And with US interest rates expected to come down in the near future, crude oil doing what they are doing and coming down and hovering around 72 levels, monsoon being good, Indian economic indicators, macro indicators, all being good. I think all this augurs very well for domestic capital markets. We also, on top of all this, we have to remember that the strong domestic inflows, about 50,000 crores per month, 25,000 coming through SIPs itself, and balanced through multiple other channels, including HNI money, insurance, individual putting money. So I think it's a formidable combination. And on top of that, when you have FII moods changing and risk on mood coming back, we have a recipe for a perfect market, and we are witnessing that once in a while. One has to remember that at such high levels and the pace at which we have gone up, bit of correction, bit of profit taking is coming, but that's par for the course, and it's good for the health of the market that we, at every level, we are consolidating for some time before moving up.
Consolidation is fine, Sudeep, but if you're a long-term investor, do you think there is a need to relook at the portfolio and churn the sectors a bit, or do you think if you're a long-term investor, stick to the ones that have been doing well, whether it's PSUs, whether it's defense, whether it's financials?
Well, I think my view had been that for some time I've been mentioning this, that large cap and being in large cap makes more sense. If you really look at the valuation comfort and the comfort at such high valuation levels, large cap does provide that. And there are enough and more opportunities, interesting opportunities in large cap. So from a long-term investor's point of view, some of the large cap frontline stocks do offer a good opportunity to buy even now at these levels.
Right, okay, that's the take coming in on what banks are likely to do. But, Kunal, just wanted to get a sense from you. Other than banks, where is it that you're seeing sectoral leadership? And would it be IT now?
Well, yeah, I think IT has been playing its part over the last 2-3 months. We've seen large caps, mid cap IT names doing pretty well. Within the IT, I believe that the mid cap IT stocks, they can start to see some bit of breakout in terms of the beta for themselves. And also, I think the underperforming pack within the IT sector, underperforming stock within the IT pack is Wipro. That's on the larger cap front, which has been a huge underperformer, still stuck at I think 545, 550 odd mark. That stock can start to show some signs of outperformance. But I believe that the stronger part of the sentimental push could also be coming back if the metal stocks make a strong short covering move. So the ingredients over the last 3-4 days indicate that there has been few stocks which have shown signs of leadership. JSW Steel, Jindal Steel are the two ones which have done pretty well for themselves. SAIL as well as Tata Steel, even though these stocks have been huge underperformers in the metal pack, the data still suggests that there's been short covering which has been going on since the last 2-3 trading sessions for these stocks. So I think it's about these stocks to try and get back maybe one more leg of short covering that could probably propel these stocks into a breakout mode, and potentially this stock can also get back into the line of covering up the underperformance with respect to the overall market sentiment along with the Bank Nifty.
Okay, so metal is another space to look at apart from the banking index. But I'm looking at the week-to-date moves, and FMCG has been a top performer with a 3% move this week. Warren Beverages, for instance, for the week is up 8-9%. Britannia has done quite well. That's up 5% this week. United Spirits is another one. Aditya, if I had to ask you your top recommendations within the FMCG pack, what would be the names that come to mind?
I like Varun Beverages. The stock is consolidating since a while and it's breaking out, whereas other peers like Britannia and Dabur, other peers are correcting today. This stock has done pretty well, bounced back from levels of 550 to 646 in last 3 days. So I think institutions are aggressively buying into this counter and accumulating it slowly. So it's a buy at 647. 590 is the stop loss, and 700 to 730 is the target. I like Varun Beverage, and second one is Hindustan Unilever. This is a classical large cap, one of the best stock in large cap space in FMCG basket. So that's a buy at 2931. Stop loss is 2750, and target is 3150 to 3250.
Right. Okay. That's the take coming in on some of the individual names which are looking interesting. Other than that, also want to focus on, some of the newsmakers today, and just want to highlight there was, of course, a massive upgrade coming in on Zomato earlier this morning. So let's just bring up that stock and show you how it's currently panning out in trade, because the House of Bernstein maintains their outperform and they've now upped the target price all the way to 330. Although today the stock, it started off with a green tick and now it's trailing around that 270 odd level. They're saying they continue to really break all stereotypes and a whole host of reasons why they continue to like this particular stock. Other than that, of course, there's been Tata Power as well, which has been in focus this morning. There's also, BPCL, wherein the management has now approved entering into a JV agreement with Sembcorp Green Hydrogen India, which is in the domain of renewable energy as well as green hydrogen. So that's the other stock which is also in focus. And the note from HSBC on hospitals is quite interesting. So Deep, wanted to get your thoughts in on where within healthcare do you still find opportunity to invest afresh?
Well, I think you just mentioned hospitals. I think that's one space which provides significant opportunities. There has been a lot of activity in this hospital space over the last couple of years. There has been a lot of M&A. Consolidation is definitely happening, and that is making the large players even stronger and with even larger presence across the country. So I like some of these, hospital companies. Apollo continues to remain an attractive proposition for a long-term investor. The valuation is not cheap, and the margin of error is very limited. But if you are a long-term investor, you have 1 to 3 year time horizon, I think Apollo does look good. Medanta also can be looked at. They are expanding their presence into other parts of northern India. And with that expansion, I think they'll be in a very good position. So that's the second one. Max is also looking good for a long-term investor's point of view. There again, a lot of interesting things are happening. Expansion, the number of beds are expanding. So the overall scenario is improving. Remember, during the COVID and post-COVID, the travel restrictions kind of limited the international patient intake, but that's again back on full swing, and international patients bring incremental and a higher margin business. So I think with that coming back in full swing is helping all these players in a big way.
Okay, so Max, Medanta, Apollo Hospitals still look quite strong right now. That's the word coming in, despite some of those stocks being available at expensive valuations. But time now to take the BTST trades from our chartist. Kunal, you go first with the buy today, sell tomorrow, and tomorrow being Monday, thankfully now.
Yeah, so in that anticipation would suggest to buy calls. PVR Inox is the first stock which I would suggest as a buy. Clear signs of a breakout above the 1650 plus mark. So buy with a target of 1700. Stop loss could be kept at 1600 levels. And ICICI Bank is something which I've been bullish on. Continue to be bullish on the stock with a target of 1280. Stop loss could be now kept at 1215.
Okay, and Aditya, what about your BTST trades?
So like I like Moti Sense, jewelry stocks have been doing well, and the kind of run which we have seen across the board in all the stocks. I think Moti Sense being an IPO stock is pretty volatile and high beta counter. Next week could also be positive for this stock. So this is a buy at 269. Stop loss is 245 and target is 275 to 290.
Okay, those are some interesting names. Actually, some of those gold-related themes have been doing very well today. Gold, of course, at an all-time high. And you've got both Manappuram as well as Muthoot as well springing up quite nicely. Where are the crude beneficiaries? You did see that sporadic move actually play out all through this week, be it in paints, OMCs. They began the week very well. Now, of course, it's a much more sedate move we are seeing. Even tires, for that matter, held out smartly. Sudeep, is that a theme to really play, the crude beneficiaries? Or do you think you'll wait for more meaningful or more sustainable signs of a crude decline?
Well, I'll definitely wait for more sustainable signs before I decide to play the crude derivative beneficiaries. There are other reasons as well. Look at paints. Earlier, we used to play paints whenever crude prices used to go up or down. But now the paint industry itself is witnessing a whole lot of changing scenarios with competition intensifying, with Birla Opus coming in. And the traditional beneficiaries of crude prices going down, being Asian Paints, I think I will be a little careful in buying Asian Paints. A couple of reasons. One is they being the industry leader, Birla Opus entry will definitely hurt them in terms of market share. It's bound to happen. With whatever market share Birla Opus gathers, part of it will go from Asian Paints. Second, one has to remember that the benefit of crude oil prices coming down comes with a quarter's lag. So it's not going to happen immediately. So we'll have to wait and watch. I don't think we should, quickly get into that. If somebody has to play the crude prices falling down, rather one can look at the oil marketing companies. At some level, they will benefit. I'm not asking anybody to buy into those because there are important state elections looming, and state election is definitely a time for government to look at oil price reduction. So I think that can affect the performance and the margins again. So we'll have to wait and watch, but the direct beneficiaries will be BPCL, HPCL and others.
Okay, point taken. So that's a view on some of these OMCs as well, and how some of the commodity-based, companies have been doing. Because of course, while crude has been soft, it's gold which has been glittering away. Talking about glittering gold, let me take it across to Shesha to get a better sense as to what's really led to this move and what our brokerage is talking about the way forward.
Well, absolutely. Look at the kind of run-up that we have seen in gold. Gold prices have risen nearly 2% overnight. Gold prices are up nearly 2.5 to 3% on a month-to-date basis, and on a year-to-date basis, gold has risen a whopping 25%. Some of the main reasons include weakening dollar and hopes of interest rate cut. Remember, there's that important Federal Reserve meet on the 17th and 18th of September. There are hopes of interest rate cut of about 25 basis points. European Central Bank also yesterday cut interest rates for the second time this year. So there are several reasons driving the surge in gold prices. Apart from that, strong buying by central banks globally is also one of the reasons why gold prices continue to surge. Now, Goldman Sachs has come out with a report where they believe that despite the run-up that we have seen, gold prices will continue to surge and could touch $2,700 per ounce by early next year. In fact, it is one of their preferred long bets, and they also said that gold is their preferred bet and hedge against inflation, especially given the economic uncertainties that we are facing globally. So yes, a kind of run-up that we have seen is expected to continue, and analysts believe that gold prices could touch nearly $2,000 per ounce by early next year.
Taken. Kunal, what's your view on gold and crude? Because you earlier hinted that crude will be falling below the mark of $70. It did happen, but it's recovered now. What about gold and crude from here on?
So, both the asset classes have gone into a negative correlation. So, earlier we used to see the trends that crude oil prices move up higher. Gold also tends to, move up in a very similar kind of a price trajectory. But we've seen that over the last 2 years specifically from 2022 mid somewhere is where both these asset classes have started to trend in a negative direction. I would probably believe that the trend would continue this time around for both these asset classes. So, which means that potentially crude could cool off on a very gradual note. Gold, what we are seeing is on the dollar terms, especially, I think has given a big breakout. In rupee terms, you have to try and adjust that 9% cut which happened for rupee prices on gold. So I think relatively we have almost come back from that 74,200 levels back to that 73,200 mark for the rupee. But I believe on dollar terms is where we've seen a very big breakout for gold prices. My sense is that we should be looking at least another 80 to 100 point jump on dollar prices for gold, which means potentially 2650 to 2700 could be a potential target range for gold on dollar denominated rates.
Okay, that's the take coming in on gold as well as crude. In the meantime, it's IT continuing to hold out. Piramal Enterprises making quite a decent move. PVR Inox looking good. And then Bandhan Bank as well holding out by about 5.5% as we highlighted earlier. Actually, it's not been the best of weeks for some of these gas stocks. So MGL, IGL, I think over the week would have taken quite a bit of fall there. But Sudeep also wanted to understand, given that the markets are back to their all-time high and there is that sectoral rotation which is at play, IT, FMCG, pharma, and now even banks making a comeback, what is it that you would avoid and also recommend maybe profit taking from?
Well, I think one sector, particularly one area where I'm a little scared, even now after a bit of correction, has been some of these PSU defense as well as PSU railway stocks. My recommendation to the investors have been to book profit and stay away from fresh buying in these counters. These are good companies with good order book position and they're gaining fresh orders as well. But the valuation is such that, time correction is bound to happen if not anything else. The order gaining doesn't translate into profit and loss immediately. It takes 3, 4, 5 years for these companies. So my recommendation is to avoid this at this stage. The margin of error is very, very limited here. And some of these companies haven't been operationally also doing well. I can talk about BHEL. I can talk about some of the RVNL. Their operational performance also hasn't been up to the mark. So under the circumstances, I think it's better to book profit and stay away from these counters and look at sharp correction, if at all, whenever there is, and look at fresh buying only then, not before that.
Okay, since we're on the subject of what's really going to happen with PSEs, let's get an ET Now exclusive. And the public sector enterprises are in the spotlight once again on the back of Centre's efforts to come up with a nuanced upgradation mechanism. We learn from sources that the new mechanism in the works may even allow the Centre to downgrade enterprises. Let's try and understand what exactly is in the works. Prakash is here with more details.
Yes, an important development coming in as we are learning from our sources that the government is planning a new mechanism for status upgradation of central public sector enterprises. A very significant development coming in. As we are given to understand that the Department of Public Enterprises has begun discussion on the new mechanism where all the financial aspects of the CPSEs will be taken into consideration. A new mechanism is being developed to ensure greater accountability where government wants CPSEs to continue performing according to defined parameters if upgraded from Mini Ratna to Noratna or Noratna to Maharatna. But the most significant aspect of this proposal is that the government is likely to include provisions to downgrading CPSE status if they fail to meet the defined parameters. A very significant development of this proposal. Along with that, the government also believes the new mechanism will foster sense of accountability within the CPSEs. However, we are also given to understand that the discussion is at very initial stage and the final decision will be taken after due consultation. As you are aware that the Department of Public Enterprises has recently granted Noratna status to 4 CPSEs like SJVN, NHPC, SECI and Realtel Corporation. and also considering status upgradation for HAL as well.
Okay, point taken. So that's about the CPSC upgradation that is expected. But just taking stock of some of the big buzzers in the week gone by, Jubilant Life has had a up move of over 20%. Century Textiles did well. Prism Johnson, despite having those flip-flop kind of days, managed to end the week with a gain of almost 16-17%. Campus Activewear has been one of the surprising ones. Didn't really take notice apart from the fact that today there was an up move on the counter. But for the week, it's managed to report good gains. Denmark Life is the other one with 13% gain. On the losing side, just looking at the losers, Granules of course had to make to that list with that kind of slide that we saw yesterday. PFC is the other one which is down 9% in the week gone by itself. Honasa too came under pressure on account of that block deal that happened. And Raymond is down. In fact, Raymond has been a bit of flip-flop since the time the ARM has got listed. But Aditya, specifically on PFC, REC, both are making it to the list of top losers this week, down 7 to 9% for the week. Is this dip a buying opportunity on PFC and REC?
Look, the stock has been correcting significantly, as you rightly said. This week was a big, drawdown for the stock. The drawdown should continue because the stock is now, just edging below its important moving average. Next support on the moving average is coming at 450. So more 5 to 15% slide is possible in this counter. And the clear-cut underperformance and relative underperformance is pointing that institutions are clearly bearish on this counter. And if you look at the option activity also, that is also bearish. And disclaimer at the last, we have suggested short positions to our clients in PFC. So I remain bearish on this counter.
Okay. That's about PFC, REC, a bit bearish on that. But let me talk about the big events which are lined up for tomorrow, or rather for the next week, because there's just less than 4 minutes left for this week to end. US Fed rate decision, of course, on September 17th, 18th, that will be the biggest talking point. So let's watch out for that. The consensus on the street is a 25 basis point cut, but if it is 50, part of the street will not be too surprised, though this could be a bit of a concern that perhaps Fed sees bigger slowdown in the economy and hence the bigger push coming in. Bajaj Housing Finance listing, that's the big one to watch out for come Monday, whether it lists at a premium of 60, 70, 80, 90, whatever percent is something to watch out for. UK, Japan rate decisions are impending in the coming week. Also, there is that expectation that China can adjust the prime loan rates, and that was the reason, perhaps part of the reason as such, why yesterday the stock markets were excited, because China's slowdown has been a worrying factor. So if that does turn about, that will be interesting, and that data point will come up for you shortly. The China loan prime rates as well. Jammu and Kashmir, state will hold the first local government elections as well. So the elections, they start from September 18. It will go on till the month of October as well. But at least the first phase will start, and definitely very interesting, Aisha, from the kind of impact it will have on the local politics as well. That's the latest as far as the market is concerned and what we're expecting next week. But overall, the week hasn't been too jarring, right? We made fresh record highs this week for what it's worth, and ending above the 25,300 mark quite solidly.
Oh yeah, absolutely. I mean, most days were a very, very, quiet and sedate start, and only then we did see the markets move the way they did. And of course, Thursday is definitely going to be the shining day amidst the entire week. But you know what? Let me take it across to Snehi and find out how the closing trades have panned out.
Absolutely. Let's take a look at how the day has panned out, and Nifty has been range bound rather in today's trading session, continued to be in the red over the course of the day, very flat with a slight negative bias, 0.1% cut coming in on Nifty, 34 points lower, but still above that 25,350 mark for now, but comfortably above that 25,300 mark is where we'll be closing today for sure. Sensex also in tandem with the Nifty today, you have almost a 0.1%, a less than 0.1% cut coming in, so very flattish moves, but testing that 82,900 mark is the Sensex as of now. Nifty Bank is one segment that has done pretty well in today's trading session, held up smartly, almost 0.3% gain coming in on Nifty point, roughly 150 points higher is where that index is right now. But if you take a look at the broader markets today, this is the space that has really cheered the markets today, outperformed the benchmark indices today. Nifty Midcap up 0.6%, you have Nifty Smallcap up also 0.7%, the small cap pack being the real sectoral gainer in today's trade. However, if you see the advance decline ratio steeply in favor of the advances, so overall it's been a rather good day for the markets, and overall it's been a very good week for the markets as well, because you had fresh records high coming in for Nifty yesterday. Sensex was in focus today. Nifty Midcap 100 has reached a new record high level, surpassed that 6,000 mark in today's trading session as well. That was the Nifty Midcap. Overall for the week, you have Nifty FMCG and Pharma also, they had also reached their record high levels as well. But today, if you take a look at some sectoral gainers and losers, Nifty Realty, Media, PSU Bank, Metal, IT. These were your big gainers in today's trade. However, FMCG and Energy have ended the day in the red today. So largely this is what was happening on the back of sectoral moves. But if you take a look at some of the big buzzers in today's trade, Bajaj Finserv did pretty well for itself on the back of that MK initiation note coming in. Bharti Hexacom was a smart gainer in today's trade on the back of that Jeffries upgrade coming in on the rating as well as the target price. 5.5% higher is where that stock is slated to end the day today. You had Jeffries on Bharti Airtel also maintained a buy rating and hiked the target price. You also had Adani Ports that was in focus, Hindalco, DLF, jewelry stocks were in focus on the back of gold reaching an all-time high, as well as the note coming in from JP Morgan. In fact, lots to watch out for in today's trading session. Kalyan Jewelers also 4.5% higher. But well, yes, to sum it up, Nifty around that 25,340 mark, slightly below that 25,300, but comfortably above 25,000 or 300 as well. So that's where we are shutting shop for the day. Almost 0.2% cut coming in on Nifty in today's trading session.